Now we play a game of good news, bad news this morning. Well, let's start with the good news. CPI this morning reporting that inflation is continuing to fade. Bad news, didn't fade as much as the market was expecting, and certainly is not as much as Trueflation was expecting. We'll talk more about that in detail in a few minutes. So that's the bad news. Good news, or bad news rather, Tesla stock is down this morning. And the good news is it is regaining and pushing towards green. Who knows where it'll end up for the day, but there's your good news, bad news start for this morning. And then we have this. We have Brad Ferguson. This is back to the good news again. Major Giga Texas production boost. Now, this is estimates that he's doing. He's not telling us how he's getting there, but according to Bradford, we have the first 5 weeks of quarter one. Giga Texas produced roughly 18 to 20,000 Model Ys. Now, this was an adjustment from his post on X yesterday, where he said 20 to 22,000, but this morning he told me we should adjust that down a bit to 18 to 20,000 Model Ys. Now, the first 5 weeks of quarter three last year and quarter four last year, Giga Texas produced 10 to 20,000 Model Ys. So this is a significant increase of about 1,000 units per week. That would be like 50,000 a year. It could be even a little more than that, 50 to 60,000 per year. So, this is why Tesla Model Y prices might have been cut last week by $1,000 for the rest of February. We're increasing the amount of supply out there, and we need some help in getting that getting an uptake from that. Now, realize that probably that entire 1,000 is going to be covered by this increase because you have a lot of costs that are going to come out by the fact that you're utilizing the facilities, et cetera, at a more efficient rate. Anyway, he says he can't reveal his sources or methods. I'm pretty sure he wouldn't be putting this up here if he wasn't pretty sure of his numbers, but we'll see over the next couple of weeks. We'll see if this pans out, but sounds like it was worth reporting, at least for sure. And then we also have this from Tesla Chan, who's commonly reporting on things of this nature. Tesla raised their Model Y vehicle prices by up to 2,500 euros in Germany. I don't know the exact euro value right now, but it's usually pretty close to parity. So that would be in the ballpark of $2,500. That's a huge increase. And of course, they were shut down in Berlin for a couple of weeks because of some supply shortages. Now they've picked back production starting yesterday. And apparently they are finding they have a lot of demand for Model Ys in Germany. So this is Randy Kirk. Please hit like and subscribe and notify. Later on today, of course, you have Brian White coming. And this evening, we got Nicholas Gibbs helping me to talk about the good news that will be absolutely popping into our news cycle between now and when Nicholas and I talk this evening. And then, of course, joining Patreon will be good. Thank you so much for all those who joined in January and early February. It's very, very helpful to the channel. And then don't forget about your Cybertruck bottle openers. All right. In a man bites dog story this morning, Tesla Roddy is reporting, sure enough, a recent video has emerged highlighting this point. Shared on YouTube by Car 9 to 5 channel, the short clip featured a Tesla Cybertruck pulling a Ford F-150 pickup truck out of which had been stuck in the snow. As noted in the YouTube channel's description, the driver of the F-150 seemed inexperienced and his traction control didn't seem to be cooperating. Thus, the Cybertruck driver decided to help out the other pickup truck. Of course, this will only be on Teslarati. You won't find it in the general news media. So let's talk about a couple of things that are potentially hurting Tesla sales this year. Things that you may not have heard from anybody else. Now, one of the big selling points when I was buying my Tesla, and probably when you were buying your Tesla or when you're thinking about buying your Tesla, is how well it holds its value. But that story has lost its luster due to the huge price decreases on the new Tesla vehicles. Now, all new vehicles had price decreases last year. And it's been across the board a very, very, very big. But of course, as those new vehicle prices have come down, used vehicle prices have come down as well. And now people are finding they bought at the high, and now if they want to sell, it's at the low. It's not, it's like any other commodity or any other thing that you would normally do. But we don't normally see these kind of swings on the prices of new and used vehicles. And so people are getting caught in the middle. We saw this a couple of times in housing, the big housing crash. A lot of people got stuck where they were underwater on their mortgages because of the huge swing in prices up and down. But it's very, very unusual in cars. And so people are like, what do I do? What do I do? They don't. So even big buyers like Hertz and others, big fleet purchasers have said, well, we don't want to buy EVs anymore, or Teslas anymore, because we've had this big price decrease and we can't sell the vehicles now at the price that we thought we should be able to. And this is hurting fleet sales, and it's hurting individual sales as people are discouraged by what they're seeing in those residual prices. So in fact, it creates a reason to go out and buy a used vehicle at this time instead of a new one. Then there's another issue that's hurting Tesla sales, is the fading FSD story. When we bought our Model Y, there was no intention that we were ever going to be offering it out as a robotaxi, but a lot of folks were buying their vehicles for that purpose. And that's a very big deal. Elon kept talking about the largest increase in value in the value of an asset ever. You'd be able to take your vehicle that you were paying, $700, $800 a month in your payment, and turn around and rent it out for $5,000, $6,000, $7,000, $8,000 a month, and you'd be able to resell it for $100,000 because it had FSD. Anyway, all these kinds of things have not matured because FSD turned out to be harder than expected. Well, there's a few people in the Tesla community, and maybe many people that are not as active as you and I might be in the whole news cycle, who are disappointed and discouraged by this as owners. But think about the new person that's going out. This is no longer part of the equation. They're no longer thinking, oh, I'll buy this car and I'll get FSD, and then, in a couple of months or a year, I'll be able to turn it into a robotaxi. Not like, there may be people still thinking that way, but it's not like it was a couple of years ago. So these are two pretty significant factors that were encouraging people to purchase Teslas that right now are not still in the equation. And so that is going to dampen demand. And we just have to be realistic about these things. All right, let's start talking about that CPI report this morning, because it's the big news. The latest reading on the Consumer Price Index released this morning shows that the annual rate of inflation dropped less than expected to 3.1% in January. This is all according to Barron's. It dropped to 3.1 from the 3.4 the previous month. But economists surveyed by FactSet had expected 2.9. So you see, you get a drop from 3.4 to 3.1. That should be great news. We should be celebrating. The bond market should be going crazy and rates should be dropping. But no, we had those economists who were surveyed. And so everybody got their expectations at 2.9, and people made bets in the bond market based on 2.9. And so when it comes out at 3.1, what happens? Everybody goes crazy. And of course, the bond market is collapsing this morning, and rates have gone up past my maximum 2.4 and up, 4.2 that I was saying that was the top. It's above that this morning by a little bit. We'll take a look at the details in a minute. Anyway, but core CPI, which excludes the more volatile energy and food prices and is generally considered a better gauge of underlying trends, rose by 3.9% year over year, the same pace as in December, and above the 3.7 that economists forecasted also. So this is not good. Let's look at some of the details here. Housing costs continue to rise. Despite continued forecast that gains in housing costs will start to slow, the data still hasn't delivered. So part of the reason for January's subdued slowdown in inflation is the fact that housing costs continue to increase. Now we know that that's happening with privately owned homes, with residential real estate that people buy, which you get this analysis based on the equivalent rent that somebody could get for that home, which is a very weird way to come up with the inflation rate for purchased homes. Anyway, the Consumer Price Index's shelter index, which includes rents and an equivalent metric for homeowners that I just talked about, increased 0.6% in January. 0.6. That is a 7.2% annualized rate. If you do that every month, it'd be 7%. The gain contributed more than 2/3 of the monthly increase for all items, according to the Bureau of Labor Statistics. 2/3 of the reason why we didn't get the number we wanted. Shelter prices have generally made up the bulk of the increase in the CPI in recent months, but January's 0.6% pace was faster than many expected. Moody's Analytics economist Matt Colliar has said he expected the indexes for rent of primary residence and owner equivalent rents to have risen 0.4%, which would have still been a 4.8% year over year. Or not year over year, but annualized rate, run rate, if you will. Shelter's slow disinflation has frustrated forecasters, Collier wrote ahead of Tuesday's data releases. So again, rents are not part of this, at least from any data that I'm seeing, not just from Truflation, but from Zillow and other people that do this kind of rating. Rents seem to be low and maybe even negative in some regards. Anyway, while rents stopped rising in 23, it has taken much longer than economists and other data watchers expected for those easing pricing pressures to be reflected in the BLS's calculation of inflation. The thinking is that if leases stopped increasing in 1 month, that would only affect people who signed leases that month. Everyone else is in the middle of who are in the middle of their leases would still be paying rent determined by the price trends that existed from their entire lease. Anyway, he adds that the Bureau of Labor Statistics assumes 12-month leases as the norm and uses a weighted average of some sort when calculating rental inflation. Anyway, to finish up the numbers, USA Today reports, Tuesday's report from the Labor Department showed that the Consumer Price Index rose 0.3% from December to January, up from the 2.2% increase the previous month, and compared with a year ago, prices were up, as we mentioned, 3.1%. Excluding food and energy, the so-called core was up 0.4% last month. That is a 4.8% run rate, up from the 0.3% in December, and 3.9% over the last 12 months stayed the same. Core inflation, we know this. Okay. Anyway, the Chicago Tribune adds this thought. Last week, both Richmond Fed President Thomas Barkin and Boston Fed President Susan Collins indicated they not only want to see the decline in inflation to continue, which is what the new rules seem to be after the old rule was thrown out, like many other officials have said, but also to broaden more meaningfully to include housing and services, given the recent slowing was driven almost entirely by goods. Are they making a new benchmark, changing the goalpost? It sure seems like it, said Michael Scardellis, head of U.S. economics for Truist Advisory Services. They have found enough rationale to put the stake in the ground to be patient. Of course, this really throws a huge bucket of cold water on the Truflation estimates from yesterday. Kind of shocking that they would come out and be so bold as to make this first time ever estimate that it was going to be at 2.5%. And then miss it by so much. Again, this Truflation group, I want to have so much confidence in them. I want to believe that they're doing the right thing. And it may be that their numbers are better than the Fed's number, the Bureau of Labor Statistics numbers. I have a certain amount of confidence that their numbers are smarter, wiser, more current, etc. But then they used those numbers to come up with this estimate, and they were completely wrong on converting their numbers to CPI numbers. So it continues to baffle me what's happening over there at Truflation, but maybe they'll have a statement today. It would surely be nice if they would do that. Anyway, we can now take the March cut completely off the table. I don't think it's going to matter what happens with PPI on Friday or what happens with PCE later this month. I think we're done on that. And Gary Black says that traders are now putting the odds of a May cut rate at only 35%. It was 50%. And a June cut is down to 66%. It was 85%. So obviously, in order to get those cuts, we're going to need to see some significant better information from the CPI and from the other reporting services. So anyway, it's a rough day out there today, and let's see if we still have a positive news. Yes, we do. So Tesla continues upward. It is not yet in the green, but it is now at only down $1.97. But we have the Dow down almost 500 points. We have the NASDAQ down 281 points. We have the S&P down 70 points. And then you've got the Magnificent Seven, 100% down, Meta down 7, Microsoft down 8, and NVIDIA down 12. Everybody's down on the Magnificent Seven. Actually, Tesla is doing better than most. And we have all of the ARCs giving up. Well, actually, they're down, but they're not giving up their great gains from yesterday. They were really, really up solidly yesterday, and they're lower, but not horribly lower. Now, for some of you who haven't followed the channel, I report on what I call the Cathie Wood stocks as being an indicator of risky growth stocks. It's kind of my own index, all right? And I think it's always interesting to see how the Cathie Wood stocks are reacting compared to some of the other indices. Okay, we're going to look at the percentages now. The Dow is down 1.28%, NASDAQ down 1.69%, S&P down 1.37%, and Tesla only down 1% this morning, as is Apple, Google, but the rest of the Magnificent Seven is closer to 2% down this morning. Let's go take a look at those bonds. You can bet that the bonds are not doing well the bonds are down because the rates are up. The 10-year is up 10.1 basis points. We've got the rest of the long terms are down more than that. So the widening again of the inversion, but you've got the very long term. The short term bonds are actually doing a little well. Some of them are. It's a very mixed bag. For instance, the 2-month, which some people watch as another one of those inversion points, is only up 0.01 this morning. And there's 1 basis point. The 3-month, though, is up, a 1.5 basis point. Yeah. So the inversion on the short terms is reducing this morning, whereas the inversion from the 10-year to the 2-year is widening by a little bit, but it's been just continuously widening. It's now back to over 32 basis points. All right, let's go ahead and take a look at oil this morning. Whoops. We're going to hit the oil market and see what's happening in the oil market. So the oils are up just a half a buck this morning, 77.32, right at the top of that range, which it has been in recently. But now listen to this. Natural gas down another 5% at $1.67 a cubic foot. Anyway, I forget what that margin, what that statement is, but it's down 5.2% this morning. That is just continues to be a very wild story. We have got the dollar hitting a 3-month peak after inflation data. We have got, going back to, going on. We have gold down 24 this morning. Isn't gold supposed to be a flight to, isn't supposed to go up when inflation goes, doesn't, anyway, down to 2008. So heading towards breaking back under 2000 again. We've got copper up just a little bit, 0.11% this morning. We've got the Bitcoin falling off, going way back under 50,000 again at 48,670 this morning after breaking through 50,000 yesterday. And so that gives us the full range of that reporting. And we'll go back and look at Tesla again to see if it's continuing to do whatever it was doing. Let's see, Tesla still sitting there at about 1% down, about $1.90 down this morning. Okay. All right. So please hit the like button if you haven't already done that. Only takes a second. Please hit subscribe if you haven't already done that. And then please hit that notify button because you know you want to see Brian White this morning. He and I will have a lot of fun. We have our second video. Well, okay. It'll still have great news in it. It'll still have interesting things to listen about, but it happened to be one of our sillier videos. We did have a lot of fun and joked around a bit. I know that you never see that when Brian and I, anyway. And then finally, you do want to join Patreon. And we've got Nicholas Gibbs on tonight. I'll be very interested to hear his take on some of this and whatever news we've got between now and then. All right, join Patreon, buy yourself a Cybertruck bottle opener, and then look forward to seeing you a couple more times a day. It has been great talking to you.